Well, what is going on, everybody? It is the best day of the week, master class time. I am your host, Mr. Banks, along with no risk, no premium. How's everyone doing tonight?
What's going on? What's going
We're
on? What's
doing
going
great. That's
on?
awesome to hear, guys.
That's awesome. I'm doing great. Thanks for asking.
So today we're going to be going over like market structure, I guess supply and demand levels. It's kind of the biggest thing that, I kind of did a mini master class on Tuesday. So we'll go more in depth. I think we'll go more uh to intraday. I think, we've done a lot of, the overview of zooming out, looking left on like the bigger time frames, but I think we haven't really gone too much into more of the intraday and understanding, what am I looking at intraday? Because obviously, if you're taking day trades, yeah, you should be zooming out, looking left on the bigger picture. But I think today we'll dive more into, the micro trends of the actual intraday structure and understanding, what we're doing, where we're at, and going in from there.
Yep.
So you want to start with SPY?
I think spy. Yeah, go to just like a 15 minute. Okay, let's see here. Now go. Let's get like this whole week on there if we can. Okay.
Let me just take the
Okay.
Thursday, Wednesday, Tuesday, Monday.
Okay, cool. So we
So
got pretty much everything. Actually, go a little bit further. Yeah.
okay.
Okay, yeah, that's perfect. Okay, guys. This is um we're gonna be talking about like intraday stuff. But does everybody see? Okay, when you let me ask a question. When you guys start to chart, are you guys looking left at all on even the smaller time frames? Like at all, like looking left? Okay.
Yeah,
Some of you
yeah.
guys.
So what we're saying is, yeah. So it's like, say, obviously you're like, okay, I'm going to take my entry on the 5 minute. Are you just zoomed in only
Like,
to
are you
here,
on just today?
just there,
Like you're just looking at today?
or do you have like
Or do you have
yesterday,
like yesterday?
day before, right?
Yeah.
That's why we're starting at the 15 minute. You'll
That's
you'll
why we
you'll
like the
understand. Yeah.
15 minute. Absolutely. Absolutely. Mostly today. Okay. I urge you guys to zoom out. And here's why I urge you to zoom out. Okay. Did we not see us closing down at 5:05 yesterday? If you would have zoomed out and looked left while everybody and their mom was calling for puts, why were we not in overnight puts? Does everybody see that? I mean, this one thing will save a lot of people, especially newer traders, especially people that, um, you know, people that really don't have a grasp on how the market works, and they think just because we've gone up for so long that we should go down now. It's not how the market works, right? If anything, right, there was a $2 gap up. Actually, there was a $4 gap up off that point, right? Everybody sees that. Right, everybody sees that. Okay, so I promise you guys, zooming out and even looking left on just these smaller time frames is going to help. So now, Justin, let's go to just have today and yesterday on there. On this 15 is fine. Okay, guys, what's the first thing we noticed? What's the first thing we gapped up? Where did we hold this morning?
Yes, that's a good question. So drop it in the chat. Where did we bounce it open?
Where did we bounce it open? And why? If you feel so inclined. Where did we bounce it open and why?
I said it on voice this morning.
There you go. Gap filled. Yes. Yesterday high. Yes. Perfect. Perfect. Now, why did we bounce there? Like, and I'm talking about this is a simple answer in the sense of what happened when we gapped up above what did we happen when we gapped up above yesterday's high? All those people that were sellers at yesterday's high, what did they likely try to do at today's low? When you're a seller, so think this like, okay, right? You're a seller. So you're short SPY at 512, right? Yesterday, you're a seller. You're short 512. The market gaps up above where you're at. Your trade is now red. Okay. It gaps up from where you were short. You're red. It dips down in the morning. You're pretty much break even. What do you need to do as a seller to get out of your position? You need to become a buyer. Exactly. You cover. That's basically called covering, right? So you're short because you sold shares. Okay. We gapped up. We bounced where? We dipped down and bounced right at that level. Time to get out. So when all of those short sellers now have to buy back the position, what does that cause? Buying pressure. Okay. And those people that aren't in anything yet see a gap fill bounce, multiple confluences there, right? Multiple confluences there. Does everybody understand that?
So one thing, right? So we have sellers, right? So does we have sellers. All of those sellers become buyers, and like you said, it becomes buying. So I'm just going to interlude this really quick. So I told you guys I would do this into the Tesla trade we took yesterday. I'm going to zoom out just a little bit for you guys. Same concept that we took yesterday. Where was this big level? 175, 175.36. Let's call it 175. So all these buyers in this level, right? We come up, we come up, we come up, we're coming down, we're coming down. All of these buyers, right? What are they going to do? Their stop losses are below this position. So I'm talking about a liquidity grab. So it's kind of like, it's essentially, it's a little bit different, but it's essentially the same thing as a liquidity grab. What happened in yesterday's Tesla trade? Well, obviously this is a massive level, right? When we come down, all the people who bought down here, what are they going to do? Their stop loss is below this level. So what happened in that liquidity grab and understanding what is a liquidity grab? Same thing that Norris talked about. All of these people sold their position because, right, it is their stop loss. And what happened with that? When they're selling their positions, there has to be buyers. So I mean, there's massive. I mean, I'm sure there was a lot of people, right? Stop loss, a lot of people selling here because this was their, level to hold. So if we break below this major level, massive sellers creating massive buyers, creating a liquidity grab under lows, right? Massive buying pressure, all the sellers turning into buyers, massive buyers creating that liquidity grab for the push up. Does everybody understand that? That
Does everybody
concept?
see it again, though? See it again from today.
Yeah, massive buyers in this.
Look at, let's dip a little bit below yesterday's low
And
and then open up above yesterday's low. Okay.
yeah, because I'm sure people bought, right? They're up here. They're like, okay,
Yeah.
Tesla, that is the bottom. What do we happen? We gapped down. We came
Yep.
down in pre-market.
Yep.
And what happened at the open? Just an explosive candle. So yeah, same idea. Lots of sellers are like, oh, I'm going to get out of my position, right? We broke below lows. This is going to keep going lower. All those sellers have to have buyers. Massive buying demand creates, boom, liquidity grab.
Yep.
Does
Yep. Yep.
everybody
Yep.
understand that concept?
This is also called a failed breakdown, if you will, or a breakdown and reclaim, right? Because what that does is all those people then at the same time that were like, I'm going to short Tesla under yesterday's lows. Well, they short, okay? Then the market popped back up above their entry. They're red. They're like, shit, I don't want to be red. So I buy back my position. That's basically a liquidity grab because the market can only move when it has more buying pressure than selling pressure or more selling pressure than buying pressure, right? So when we dip below and then immediately bounced back up and opened above yesterday's low, that's called a failed breakdown or a breakdown or a breakdown and reclaim is another word for it. Okay. Where you basically just go trap a bunch of people, get fuel for your longs, and then the market goes higher. Okay.
Uh,
Uh,
could you ask that?
wait, is there
I'm just kind of
anything?
confused because it's
Wait,
March 7th and it's saying March 10th.
is there anything that
Okay.
suggests it was going to bounce around 310 at the open, or were you just watching price?
I was just
Three.
watching price, like we
Yeah.
just talked about. Massive level. This is
Yeah.
exactly what we just talked about. Massive level. What am I gonna look for?
Or
Probably a
Justin, put a line there at 175 so that, and then you can go down to a smaller time frame from there. And well, will it stay actually
yeah.
on
Well,
this? Okay. Yeah.
oops, wrong one.
Oh,
My bad, guys.
so 175. You guys see that, right? Now go down to like a tradable chart, 5 minute, 10 minute, whatever. Okay. I bet the fit go to the 15 minute. Watch this. I bet this looks like a wick. Let's go to yesterday. Yep. Perfect. Long wick down. Okay. Trap all those
Kind of like a
sellers.
tweezer.
Yeah. Trap all those sellers. Okay. And immediately pop out and bounce out. Right. How
I
many times?
I guess
Okay.
just
Let me ask. Oh,
understanding
yeah. Yeah.
the idea of where liquidity grabs would happen. You have to
Yeah.
watch the price. I mean, it could have sold off here and gone down to 170, absolutely. But Tesla's been selling off for quite a while. Think that this big level here, that 175 level, would more than likely, right,
Hold on the initial touch.
hold
Yep.
on the first initial, because what
Yeah.
would this be?
I mean,
What would
look,
this
it's
be
already
called?
dropped 30 off the
Yeah,
highs,
I mean,
right? Like,
relief pounds somewhere. What would
yeah.
this be called? From here to here. Two words. I know you guys got it. Nope. Nope. Two words. What is this? Donna, 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 Donna. We go over it almost every master class. All right, breakout retest. Breakout retest, guys. Come on. Breakout retest. Breakout retest. Breakout retest. Right? We go. You got it. You got it close. You got the retest. Yes. But
Yep.
guys,
Double bottom. I mean, you guys could just see. You guys could see where this huge balance now. This is a massive balance zone now,
yeah,
right?
there's some
Unless we
demand coming
continue
in.
down. If we pop back up, you can have this whole zone defined as a balance zone.
All right,
Okay.
cool. All right, we can get back to SPY. Sorry, I
Okay,
just
let's
wanted
go
to
back to SPY
go into
now.
Tesla because I told you guys to go over
Okay.
that. But because that
Okay.
was a perfect interlude of, sellers become buyers when they're selling the shares at a certain level,
Yep.
creates that buying pressure or it can create that selling pressure. So,
Okay. Go to the 15 minute now.
okay.
Let's just look at today being the daily. I mean, today being so you guys could see now, right? All those people that were short yesterday. Okay. Long, now you're long today, right? Because you gapped up, you held the back test. Great. Now, let's even take it a step further. And go, and I think was 512-ish a level, if I'm not mistaken, or 513 or something like that. I don't know.
Yeah, I mean, I bought the calls on this flag out right here.
Yeah, yeah.
Yeah.
So now, okay. So easily can you see, right?
Come on,
Obviously, you don't even need MAs on this chart to see. We had a gap up, a gap fill bounce, a continuation higher. And where did we get above? What were we above today?
Oh yeah, we got to kind of zoom out for that part.
Oh yeah, sorry. Yeah, you guys zoom out just a smidge. There you go. All right, cool. So we break out and we get above where? Previous what? Previous
All
all-time
time.
high. Okay. Now if you go down now go down to the 15. So you got that level marked, previous all-time high, right? Look where we held. Right? Look where we held. Price accepts above the previous all-time high, flags out, and moves higher. Right? Then look where we bounced in the afternoon. Previous all-time high. Right?
And then I want to show you guys going into market structure and understanding. Is because you can say, okay, well, we kind of pulled below this. We never had a full candle break closure below it, though. And another thing I
Yeah.
want to keep you guys in mind is
I'm sure
market
the
structure.
volume was
What is
pretty insignificant there on the cells as well. I'm just thinking out loud, but
right? And what is going on here? Right?
yeah.
What's going on here? Are we not creating higher highs, higher low, higher highs, higher low,
Yep.
and then push, right? So even though it kind of went sideways, it's still a bullish market
You
structure,
have to
right?
ask yourself, guys, what would tell me I should get out of this trade to the upside? And if someone could give me a good reason why you would get out of a trade here, right? Because it's obviously extremely bullish structure above all-time highs and flagging. Why would you even look at puts? Why would you even think of puts? Because you missed the move to the upside, or you have a true conviction of a bias to the downside? If it's you want to just short a trend day just to be right, you're completely wrong.
Or because you saw this yesterday.
Yeah. Here's the oh, it sold off yesterday. Well, that's why yesterday's yesterday and today's today. Right?
Yep. Yeah. So just because something happens yesterday doesn't mean it's going to happen today, right?
Yes.
Everything, I mean, kind of everything we've been going over is there's nothing bearish about this, about
No.
any of this. It's kind of like an evening star here. But other than that, until we got to
Yeah.
this point, there's, I mean, this higher highs, higher lows, all the
Mm-hmm.
way up,
Yep.
right?
Now let's go to like a 5 minute from like yesterday. Let's look at yesterday.
Okay, cool.
Yeah. Okay. Now let's do yesterday and the day before, just so we have yesterday, the day before yesterday's reference. Okay, cool. All right, here we go. Here we go. Okay. So you guys are seeing here yesterday. You can actually probably even do a 15 minute, so it's not as wide. But this, I mean, 5 minute works, but 15 probably looks a little bit cleaner to you. Wait, yep, right here. All right. All right. All right. We had the same thing. Close at the lows at 505. Gap up. Okay. And gap up. Perfect. Okay. Where did we bounce? Now, we didn't bounce at yesterday's high, but what do we have to our left here? What do we have from that line? Justin has perfect levels on here pretty much. From that 50, whatever that line is right there, Justin, just above your cruiser, just down a little bit. 509, that one. But 507.
Yeah,
Okay.
507.
And 50
9.
go to yes. Now the day before, yeah. Go down a tad to the balance in there. Yeah, before we broke down. The top of that balance is what? Right there.
About 508.
508. Okay. Look, guys, when you have candles trading sideways, what is that called? That means that buyers are what? Buyers and sellers are equal. The market's not going anywhere. They're equal. So it's called balance. Good job. I think Lacey, did you say balance in there? Good job, Lacey. Yes, balance. So the market has balanced. It has balanced. Okay. So when it broke out of that balance to the downside, it became supply, right? Cool. Okay, great. Okay, great. And then it bounced back up at where? At demand. And if you look, you know that 505 is from where? You just got to zoom out and look left. Bounce right up. Okay. Then we gapped up again. Great. Okay. We gapped up again. We did not open up above yesterday's high. Okay. Now we're on today. Yep. So we gapped up. We did not open above that previous day high, right? But you can see the level there, right? Look, that's where it reject on the open. Cool. Where did we bounce? Did we retest that balance? That was supply. But since we gapped up above it, all those sellers in there are like, fuck, get me out of here. Right? Is everybody seeing this? Right? Is everybody seeing this? You can find balance. You can find supply. You can find demand. On any time you go on a 1 minute, you can see it anywhere. It's everywhere. But it's going to be harder to identify when you do not have at least more than 1 day's of data on there. Okay. Right. Does everybody see that? March 6th, where his cruiser is right now. Okay. We closed the day before at, or, towards lows pretty much. Okay. Yeah, dude, this is such a clean app for like doing stuff like that. Like
It is. I know. I like
so clean, like just so fucking clean, dude.
Yeah.
That made me so happy with you doing that. I don't know why. It just makes me feel good. Anyway, so we see this, right? We can see, okay. that when you zoom out and you look left, it makes perfect sense, right? Sellers outweighed buyers on the close on the day before the gap up. Okay. It bounced at the close, but then we gapped up on the March 6th open, sold right to that level and bounced. Okay. And then we went right to 512, which we know 512 is what? Previous all-time highs, right? Or sorry, I'm sorry. Was before the 514. That 512 was the big level. Sorry. On that reject. Yeah, 512 was the big level though. Where did we reject? Right where we broke down from at that balance that we have for 2 days up there. You guys see now go to March 1 to March 2. We spent 2 days up there. Then when we broke underneath it, what does that become up there?
Somebody type in the chat. What is this? What is this
Balance for
area
2 days
become?
up there.
What's the
Breakdown
break
from it.
below? What does it become?
Resistance is not
Yes,
wrong.
that's good.
It's not
Yep,
wrong.
absolutely. Yeah, this line will be
That's
512 is
resistance,
resistance.
which is also what is resistance, guys?
What would this
Who is
range be?
resisting the urge to let buyers get through? Sellers.
Supply. Absolutely.
Yeah, supply. Good. Okay,
Yeah.
good.
So yeah, good. Actually, I'm going to point this out too. Yeah. Resistance, 512 is the actual resistance line.
Yeah.
This range between 512 and 514 going to
Okay.
be supply
Would be the balance, and then
area.
so it actually is supply area because
I'd
the
say the
market
513
balanced up there. Yeah, right. Yeah,
This was like
yeah,
a liquidity
yeah,
grab.
yeah. Kind of a liquidity grab up there, exactly. Okay. Now look where we went and bounced or rejected. Excuse me. Now we can go back to we went and rejected. Boom. Okay. And then we sold off, and look where we bounced. Where did we bounce, guys? Oh no, sorry. Go back. Into intraday. Yeah, yeah. Sold off. Look where we held. That's the morning low. Okay. Okay. That's also the previous day balance. Top of that balance held, right? And then ended up gapping up from that. Okay. Now, what happens after hours and overnight? Zero control. We have no fucking idea what's going to happen. Okay. But intraday, you can easily see, right? If you just put a little bit more data, look a little bit more left. When in doubt, be like, the last time we were here, what happened? Okay. Last time we were at 512, if we're looking at the day in front of us today, right? Last time we were at 512, you just look left and go, we broke down from that level. So are there some sellers probably waiting? Probably. Right? Probably waiting. Okay. Okay. Everybody understand how we've explained this so far? Yes. Okay, cool. Thank you for answering. Everybody type yes if you can. Give a thumbs up. I want to know that you guys are understanding. Okay.
Overnight
now,
and pre-market, you'll see still plays to the levels.
They
pretty
still
true.
pretty much respect the level. There's not a lot of movement. No, if someone was like, we're going to gap up again tomorrow, I mean, they're full of shit. You don't know what's going to happen. But do you notice that even in the after hours area,
I mean,
it really it still respects the levels pretty well. That's why a lot of people are like, oh, well, this is pre-market low. It went a little bit below pre-market low, which was a little bit below. I was like, it's the area. The area, okay, is helping you. Okay. Now, Justin, let's go to March 5th day, right? So the day where we bottomed out and closed at 505 down there. Yep. Okay, cool. Now let's zoom a little. Let's have so we can have a little bit to the left so we know where we see that demand. Yep. All right, guys, cool. So look. The market sold off this day, right? This is Monday, isn't it? Or no, the 5th is Tuesday. Is that Tuesday? Yeah.
Yes.
Okay. The market sold off. Ooh, scary. Sold all the way off to where? Demand. So now I'm going to ask you guys a question because a lot of you guys are like, how do you know when to, if you take a call, what's your price target? What are you looking for? What are you doing? Blah, blah, blah. I mean, the daily chart, you could have just seen 505. It does. We do not want to go under.
Massive demand there. Yeah. I kind of went over this on Tuesday. Was this, this big demand also breakout?
Yeah.
Retest into demand.
Is that demand? And there's leftover what down there? Buyers. There you go. Okay. Yep. Go back to the 15 and I'm going to ask you guys. Let's just say, are you in the 5-minute works too? Okay. Sold off that day. There you go. Oop. Sold off that day. Okay. Right down to 505, right? At the end of the day there. Yep. You guys see it down there, right? Sold off. And now you're like, hey, I'm going to take calls down here. Right? You're like, I'm going to take calls down here. And when you do, let me ask you guys something. So if the market only searches for liquidity, okay, if you took calls down there, okay, where would be the ideal spot or the price target you would be looking for? Okay, so you take calls, you break out of the intraday supply between 507 and 509 or whatever that in that area right there to the left of it. You break down from that. You go down to lows. You're in demand. You buy calls. Okay. So that first big green candle, if you're trading a 0 date, I think you get at least 20% in there. I probably 100% on that candle by itself. That's like a 2 point
Being that
candle.
close to close, yeah, I mean
Yeah, being
at
that close, close.
least
But
20%.
let's say you buy a week out because you're like no risky and you want to make buying time great again, right? And let's buy a week out, and then you got like 10% there. You're like, shit, 10% is great. You trim a little, or you get 20% there and you trim a little, and then you go down to runners, right? Or you just leave a contract, whatever you do. Where would you be aiming for us to go retest? Everybody answer in the chat. The market searches for liquidity. So the market searched for liquidity down at 505. It got it, right? It got it. Now you guys see, where did we break down from? What would that be up there? Yep. If we wanted to go search for more liquidity up there because we couldn't break the lows, we need more liquidity to get through the lows. Let's say the market's like, I want to go lower. Well, we need more sellers to jump in on board up here. So they're going to bring it back up to 507, 508, this area right here. Yes, where we broke down from. Okay. Wouldn't it be ideal to take profits there?
Because you understand, right? Is this imbalance between buyers and sellers, right?
Yep.
Sellers are kind of winning. Where's there going to be the most amount of buyers and sellers or liquidity and
Yeah.
a balance
And
between
that,
buyers and right? Because
yep.
there's the
Yep.
most amount of contracts, traded volume, whatever you want to call it, buyers and sellers, where there's going to be liquidity, right?
Yep.
Right. The most traded, it's going to be right in this area, right? It's not going to be here. It's going to be
Nope.
here. It's going to be in this nice balance. So that's
Yep.
where you would look for to find that liquidity. So
Yep.
are we starting to understand liquidity a little bit better?
Okay, guys, remember the saying that I said on live the other morning? You guys answer it for me. The market sometimes tells you where it's going by showing you what? Where it's not going. Okay. Market couldn't get below 505. It couldn't get below the demand at 505. Seller's not strong enough. Where's it going to go? So it goes up. Is it going to try to go get some more sellers? Get some more of the seller gang? Probably. Right. And the fact that it broke back into that demand, like into the supply up there, shows me there wasn't enough sellers sitting left over up there. Right.
No, because we most likely would have rejected here at
If
close.
now, yeah, that last
Sorry.
15-minute candle that's in the balance up there, that should have been a red candle down if that supply was still very strong. Right? That would have told you, okay, shit. Yeah, there was enough demand to pick us up off this level, but not enough to get back into the balance up there where all those sellers now have to buy back their position because they're red. Right?
And they're like, oh shit.
Right.
Bye. Gap up.
Okay.
Yeah, I
Okay.
mean, if you want to draw the levels, yeah, draw supply and demand, absolutely. Go, yeah. I mean, you can draw it and label it. Yeah, I think that'd be a good thing for you guys to start doing on your charts is, drawing, where would
Yeah.
supply and demand be on your chart for yourself if you can't visualize it.
Absolutely.
Um, yeah, I mean, do whatever works best for you. Absolutely, 100%.
Uh-huh.
So if you need to draw it to visualize it and to learn it a little bit better,
Okay.
definitely do that. 100%.
Let's go. Let's do another example of this. Justin, right in the middle of your screen, March 1, like right there at March 1. Yep. Zoom that in a tad because this is good. All right. So February 29th, I think that's that big green candle. That was news back there, right? That was a big news candle right there. Yeah, I think that was February 29th. That was Friday, if I'm not mistaken, right? Wait. No, that was Thursday into Friday or Thursday. Thursday we had big data, right? Thursday with big data. Huge run up, okay? Tested the lows again intraday. Cool. Okay. Melted back on up higher, closed below the lows, gapped up the next day above the previous day high, and proceeded to do what the next day on the open? Where did we hold? Why did we hold? Who was sitting short at that arrow that had a chance to buy back and not get their butthole ripped open? Sellers instantly went, this is my chance to get out.
Not break below. They tried. We got some wicks down. The sellers tried.
Got some wicks, right? But we held. Went higher. Now, someone's going to be like, oh, well, Chris, look, there's that big old wick up there at the 5 minute at the end of the day. Look at that. What? Well, we opened up below that. Okay, sure, Sherlock. Sure, we did. But that's why we trade areas of interest. All that is up there are longs that are trapped for sure. But notice the candlesticks. You guys won't see this. If you're on a 5 minute, I guarantee that candle looks like a big green bar up. But if you start looking at a 5 minute, a 30 minute, you're going to be like, damn, look at all of these wicks. Where's the major levels? Okay. Even in that same day of that same example that we went higher. Yeah, is that it right there? So like, let's look real quick here. So on the morning we held, right? On this March 1, we held. Okay. This is the what? 30 minute. We held. We got above yesterday's high technically at 509.10, right? The actual wick high of that day up there. Go to the left a little bit. That wick high up of yesterday or the day before. Yeah, that wick high. Look when we finally broke the wick high. Where did we retest? What candle retested that? Look at that. So that came into play later. I call that a minor level. But we are already above the bulk of sellers that were sitting from yesterday. Okay. Guys, I promise you don't have to be on the 5 minute all the time. Some of you guys way too zoomed in. Way too zoomed in. Zoom out. Look left. When in doubt, zoom out. Right? When in doubt, zoom out. Ask yourself. All right. I don't know what's going on in the market right now. Let's take a look at what happened when we were here last time. Right? Because all the market is made up as just buyers and sellers sword fighting all fucking day. That's all they do. That's it. All day.
Yeah, and I think that's what causes some of you to like maybe have anxiety or you FOMO or you force a trade because you're just sitting on this. That's it. Not the day
Yeah.
before. I mean, you
Yeah.
might have your pre-market high, pre-market low levels marked, and you're just sitting there and you're just like, okay. But yeah, you're not zooming or looking left. Some of you even trade on 3 minute. And you're just like,
Oh fuck, dude. You guys that bro, my heart just started racing just hearing you say that. Like what
um,
you guys can, but you can look for your entry candles on those time frames for sure.
yeah.
But like the moment we get in it, like zoom out.
Mhm.
Because like even if you're red on the trade a little bit, but it's like, oh, we never broke this 508 level from yesterday. Like the whole intraday, you guys can see it here. Like, let's say, Justin, you were like, I'm gonna take a call at the end of the day here, right? But you're on that hammer candle right there. Yeah. So let's say you take it right there. I'm taking calls. And it pops up, and let's say you don't sell. That's fine. And then it continues to flag out. But if you're so zoomed in and because they're nearing expiration, you probably go red on the trade a little bit, right? Or you just see that you're moving down. When in reality, have we broke any major level to the downside? No, right? what was a trade that what was a swing trade we were just in? We were down really big, and then the next day it was green. And everybody in the chat was like, "Are you still in this? Are you still in the MMM?" Yes, go to MMM real quick, please. Thank you, Lacey. And when I say down big, we were down. I think that's off the top of my head. I think the contracts were like 180, and I'm pretty sure it got sub $1. So I mean, that's like 50%, 60%, whatever. Okay. Here's the 4-hour chart. Okay, cool. So what was our level? What did we know? 90, right? 90. And although we had already had some trims on the trade, and it was a great trade off the lows, when we got in like maybe a week or two ago, I can't remember exactly, but off the top of my head, we were up 20, 30, 40% on it for sure. Cool. That's why we sell into strength. Okay. And we're kind of into runner sides. The trade went red, but where did we never get under? 90, right? Okay, guys. Perfect. Justin, put a box around that area from October 2nd to October, whatever that line is. Yeah, right there. Guys, all right, cool. Here we go. Now we're zoomed out. What is that zone right there? What would you call that? Buyers and sellers are equal. Balance. Nemish is right.
Yep.
But it became demand. Lacey's not wrong. MF, you're not wrong. But just that zone, what is that zone called? Balance. Buyers equal to sellers. That's why it just bounces back and forth and balances. Like think of a teeter-totter. It just balances. The moment it breaks out to the outside, who won the battle down there? It broke to the upside. Who won the battle down there? Buyers. Good. Okay, IT. I just want to make sure you're on. Cool. Buyers. Okay, cool. So we rip up and we go to 110. Great. We just had the breakout of the balance, and then we retested. Okay. And all of those people that were short there on the top of that balance likely are going to defend this area and have buys because they want to get out of their positions if they aren't yet. And all of those buyers in there want to defend their position. Right? And IT make a good, like now you sell it straight. Yeah. Guys, if you take this thing from 90 to 110, please fucking sell. Okay. sell into strength. Abscess always. Okay. Get your hemorrhoid cream on. Just please. Anyway, 4-hour chart here. What is this? Daily chart here. Right down into, and we had 90 as a level. What else did we have on here that was perfect? Can you do the fib retracement?
Yeah.
Go from that low. Yeah, that low, and then to the high. Yep. Oh no, retracement, not the extension. So it's going to be the one to the left of that. Up. Oh no, up. Yep, that one. Okay. Is that the 78.6 at 90 at demand? There's a lot of confluence at 90 right there. Right? Tell me one thing that would tell you to go short here. Now, if we break under 90, like a full daily close with volume, I'm not talking about a wick. Okay, that's why a lot of you guys too, like when we're swinging things, right? We just had a wick, and I don't even think we got under 90, but we got into the 90s, right? On a wick. And you guys could see that one wick is that we had, and we had a great day after. But a lot of people were like, "Oh my God, are you still in it? Oh my God, we're so down. Oh my God, oh my God, oh my God." I just asked myself, is there a reason for me to no longer be in the trade? Right? Don't give yourself reasons to stay in. Try to find reasons that you shouldn't be in. Because we could easily be in the wrong position and make up excuses or make or a confirmation bias, position bias on why we should still be in a position, right? Because Lambo. You know what I mean? Because we want it to go up. But no, it's like, hey, all right, look, well, why shouldn't I be in this? Like, why should I get out? Okay. Nothing told me to get out. My plan was I'm going to long demand at 90. And unless we get a big daily red candle close with some volume under 90, that's still demand. That's still demand. Let's go to the BA chart. And this is the same thing. Go to the BA chart. Same thing here. Everybody that's shorted underneath 200 on the daily chart here got wrecked. Okay, 196 is our downside level, and it's the 78.6 the 78.6 fib level, right? See all those bottom wicks?
It's definitely buyers here.
Yeah. No, the reason why Apple fell so much is it broke out of. So this is a good example to show just the opposite side now. Apple, we played a demand that got overran by sellers, right? So you guys see that 180 or 17, actually it's 178. Justin, don't yell, don't yell. 178, 178, 179. You guys see that demand that was there, right? Apple broke the level to the downside. So what happened to all of those buyers in there that were supporting that 178? All of them, the moment we broke below, what did they do? They're like, fuck, I'm red. Time to sell. Turned into sellers. You had to sell your position. So now you have all these people that are holding shares, dumping them in confluence with people that are shorting the stock. Okay. You guys want to know how we have short squeezes? Is because you have a flurry of buying happening from people that want to go long and people that are trying to cover their shorts, because you have to buy back your position to cover your shorts. And then you're buying outright long positions at the same time. That's why it's a squeeze. Same thing here. Break out of a major supply level. Okay. I'm assuming break out of a major balance area, which was demand. Now this is supply. 178 is supply now. Okay. 178 is supply. Right. But we broke down to the downside. Big red candle underneath it. There you go. Continue down another 7 points. Right. But now we're getting to where? Right. Do you think their buyers are supporting that level down there? Give me one good reason why you would short at 165. I'll give anybody $1,000 right now. One good reason to short 165. Trick question. There is none. Lotto, your lotto's better in my account. I'll send you my fucking Cash App, my Venmo. You guys just send me the money. It'll be better in my pocket. Okay. How many people just realize that they need to zoom the fuck out when they're trading? It's okay to be honest. I mean, I remember when I zoomed out, when I learned to like really zoom out, it was like, oh my God. It was like having like horrible vision and then having 20/20 vision. Like in a snap.
And honestly, there's still some days where it's like, oh, I
Sometimes
should
you
have zoomed out. Like
no,
there's still
yeah.
some days where I'm like, okay, I
No,
should
you're
have zoomed
human.
out.
No,
I'm an
you're
idiot.
absolutely
Like,
human. That look, that's just called being human. You do. But a lot of people that don't zoom out, they make those mistakes much more often,
yeah.
right? Whereas somebody that is always zoomed out, sometimes you'll get a little too zoomed in.
Mhm.
But you're more times often zoomed out. Sometimes you get and it gets you to maybe look to take that wrong or a trade that does go against you. And then you look back and go, damn, I should have just. But there are people that are so zoomed in, they don't even have a reference of what's going on the zoomed out. Right. Yeah. Perfect. Okay. So it seems like a lot of you guys are starting to under. So now you guys see when we say, guys, zoom out and look left. Or whenever you ask, like, what do you think of this? First off, that's the worst thing to ask in Discord. If you want me to instantly hate you, do not ask me where you think something's going. guys, if I fucking knew where everything was going, I wouldn't be sitting here with you guys. I love you guys. Don't get me wrong, but I don't love you enough to have a goddamn crystal ball. I'm not sharing it with you guys. I'm a goddamn gazillionaire. If I knew where everything was going all the time, right? If I knew where everything was going all the time, I wouldn't. I wouldn't be sitting here with you guys. Just gonna be honest, right? Or not. I wouldn't be sitting here as long. I'd be doing so many other things. Okay. Um, but I mean, guys, before you ask, like, where do you think this is going? Tell me what you see? Hey, no risk. I see 165 is a major level on Apple, but I see some wicks down and some demand and buying between 168 and 169. Okay. Do you think do you think do you think this is a place where we can swing long? Well, that makes me way more inclined to answer. Okay. Because I'm also not your personal alert service. I'm not your personal charting service. Like, what happens when we take off the training wheels on the bike? You know, fall down, hit your head, have an aneurysm, and die. Right. And if you're wrong, that's okay. We'll fix it. I'm more inclined to help you fix something if you're seeing something that I'm not seeing, right? I'm more inclined to help you fix that, right? More than somebody that's just like, tell me where this is going. Tell me where that's going. What contracts? Are you still in this? It shows me you have no initiative, first off. You have no initiative to go into the swings channel and just take 2 fucking seconds to see what we're in. And I got to be honest, I think I do a pretty good job of updating everything. Yeah. Now we're in a lot of swings. It gets a little messy, but you just got that little thing on your mouse. It's like a little wheel. You just scroll that and it'll take you up a little higher. Oh, Lacey coming in real close. This is a high IQ move right here on Lacey. Lacey just giving just straight alpha today. Or use your search bar. Just use search bar. Search it. Goddamn. Everybody give Lacey a round of applause. That was just some straight. That's a high IQ move. A lot of you guys, that's probably still went over your head. Shit went over my head. Good job, Lacey. No, guys, search for it. Guys, have a little initiative, right? Have a little initiative. And I'm not being facetious at all, Lacey. I'm being serious. That's such a I'm glad you said that. Guys, search for it. Like, you guys know you can search for individual people as well, right? Or keywords, right? And it'll show you every single thing that's been said. I wear a helmet while trading. Yeah, I do too. Okay. Okay. I think a lot was said tonight.
We can open up to some questions.
Yeah, maybe some questions here. If you learned one good thing tonight, put a thumbs up in the chat. One nugget of information. One nugget. Nice. Good, good, good. I'm glad you guys are all typing in. I love it. I love it. I love it. Appreciate you guys. Okay, cool. I just wanted to make sure everybody, guys, it helps us. I promise. I know we harp on you about the emojis thing and everything, but like when we do something and we say something specifically, or we enter and we see like 2 people, it's like, are you guys paying attention? Right? Are you paying attention? That's what we want to see. So I appreciate you guys all responding right now. It helps. It also makes me feel better that a lot of people got stuff. All right. If you didn't get anything out of this, if you got nothing out of this, just remain quiet and don't say anything at all. Okay. No, I'm just kidding. If you got nothing out of this, then you're just so much of an experienced trader. And this Discord is probably just not for you. Just being honest. No, I'm just kidding. But no, you must be a pretty successful trader. So good job. But that little thing is I think this little intraday lesson was pretty solid. I'm very happy about how we explained that to you guys. A lot. Okay. I'd say about many of you guys should go back and watch this again. For sure.
And here's the thing is you go back and watch it, but the next step is you really need to put put charting into practice, right?
Yeah,
You
then
need
go
to put
chart
it
it.
into
Mm-hmm.
practice. One of the things is like, okay, I can learn a concept, but it's going to take that practice of drawing that supply and demand
Mm-hmm.
over and over and over, drawing your support resistance levels over and over, and then looking through the charts every single day of, spend 30 minutes trying to identify this week's supply and demand, try to identify those levels that we just talked about, right?
Yep.
Of like, okay, wow, support kind of broke, support. Oh, where do we break up and where do we oh,
Oh,
look at
yep.
that?
Yeah.
So go back and you have to put it in
This every
practice.
chart. Every chart has this, guys.
Yeah,
This is
it's
yeah.
yeah.
But you guys look, you're looking at 3 days of data here. Some of you guys aren't even looking at 15 minutes of data, man. You guys are so zoomed in, like on an intraday chart. You just need to zoom out and look left. It will answer almost all of your questions.
Yeah, so I mean, if you want to take this seriously, you want to see the results of actually making money consistently, you will have to do this. And I understand there's new indicators out there that will draw your support resistance lines, your supply and demand levels.
Mm-hmm.
Cool. If you want to do that to like get a better idea of it, still please be putting actually drawing lines and drawing supply and demand zones for yourself. That's the only way you will truly be able to see what's
Yep.
going on.
Kelly asked a good question. She said, good rule. Zoom out, look left of the most recent previous PA around the current level. When in doubt, zoom out. If you're unsure about a level and like what's going to happen at it, just see what happened last time. Right. So yeah, I think that's a great rule. Zoom out, look left. Real simple. Someone asked a question back up here, and you guys all shoot. Maybe was that just the only question? Hold on, someone asked one. I did a rule.
That's why we buy time, right? 165 would be an ad level for me. Really. For me, that'd just be another ad level, right? Because when we take swings, we have our starter and then we have our ads.
Yeah,
I
yeah,
mean, 165 would be an ad level
yeah.
for me on the swing.
Guys, there's a reason why I haven't trimmed anything on Apple yet because I have like a quarter size on. Like that's it. Right. Now, if we continue to hold these areas and we don't even get a little bit lower, then you can look to add. Absolutely. Right. Now, okay, here's the other thing. We got over 20% today on April contracts. Or yeah, April contracts. If you took this week's, next week's, 2 weeks, 3 weeks, you're up way more than that 25%. Remember, when you buy more time, you're not going to get those um like you're not going to get those insane 0 day moves. Right? You're not going to get those insane 0 day moves. Okay, like those like you're not going to if I'm buying April contracts, I'm not going to have
No,
200%
you wouldn't
on
be
that move.
down 80%
No,
from
you would not be down
grads.
80%. No. Because we bought so much time.
Yeah.
That's why we buy time. Now, if you bought a weekly, yeah, if you bought this week's at 168 and you did not sell into strength twice, that means that position at 168 that went to 170 went up 3 points. So if the delta, if you're buying at the money, is 50 cents and it's up, the contract's up 150. And if you're buying at the money on Apple, it's like $1. That's over 100%. And you don't sell, then you're just greedy at that point. You're just greedy. And you have no sense of, yeah. All right, we got no
That's why
sense.
we swing light. Swings can go down
Yeah,
50%
you
or
should
more.
let,
I would
yeah,
say obviously if you're at 80%, but even I've seen swings time and time again. If you're buying at the right levels, which we're
yeah,
buying at the right levels, yeah. If you bought at 175 for a swing into one and you bought 180 contracts and we're down at one set, like no,
yeah,
you would cut the trade. This trade would be
yeah.
gone. But
Here's a,
we're at
oh,
a
yeah, big
extremely
area.
massive area of demand. Like
Yeah,
this is
guys,
really the biggest breakout and retest level here. Maybe we get a liquidity grab on 165, but we're buying at such our downside. This is the thing where some of you, your downside is so far down that you hold it. So say you were like, you bought it at 175 and you're like, well, my cut level is
So
165.
165
That
stop
is
loss. You're like, oh
way
shit.
too much. No, we're buying at
No.
168.
Yep.
Yeah, 165 is going to be our second level to add. And maybe if it dips, we get a full candle body close
Mhm.
below this, like on the daily.
Yep.
Yeah, then yeah, we'll cut it. But
Yeah.
this is the thing I think with some of you is that you're buying, sometimes you're buying at levels.
That
Um,
aren't real levels. They're not big.
yeah,
They're not big enough
where your
levels.
downside is so far. And that's why you're
Yeah.
getting such big losses on holding to where
Yeah.
you think that next downside level is. Your next downside level shouldn't be so big to where you're down 80% on the contract. That
Oh
means
yeah.
that you're
You didn't buy enough
either
time. You didn't
you
buy the
didn't
right level.
cut,
Yeah.
soon enough,
Yeah.
or
Yeah.
your risk to reward is off, your levels are off, your next
Yeah.
demand is off, right? Your next level down is off. Um, so that's what I would say is if you're like keep going, you're like, well, I'm holding to my next level and you're down over like 80%, you're not buying at the right level.
Yep.
Or you're not cutting. You
Yeah, your
you know,
stop
your
loss
next
isn't
level
tight
is
enough. Yeah, like you're
because
not. It's not because you're not buying at a major level. Your stop loss is at a major level, which is far lower. Right, it's far lower. Which you need to just buy at a major level. Right.
yeah, I mean, I would think Apple's still a
I think it's
buy.
still buy. Yeah. Now look,
Absolutely. If we
obviously,
get to
look. Let's
165,
look at today. So we bought yesterday. We got 10-15% yesterday. We dipped underneath the low today. We made a new low on a wick, and the contracts went to, I think they went like 6 cents lower than what we had got them at yesterday. That's why you buy time. I guarantee if you look at a contract chart of something this week and you bought it 168 yesterday and it dipped below, it's probably down significantly more. Okay. This is why we buy time, right? And what happens when you buy time? You have to pay a premium, right? You have to pay a premium to have basically theta not working against you, right? So you're paying more to allow the trade to hold its value. That's, you got to think about options that way, right?
and one thing I know a lot of people have smaller accounts is, you get in the idea, well, I can't buy multiple contracts. That's okay. Say it's a
No.
$2.50 contracts, $250 for one contract, and that's all you can buy. It's still the same principle as if, something was 25 cents,
Yeah.
right? And you want to buy 10. You're like, well, I can only buy one contract. I want something that's 25 cents. I could buy 10 contracts on it.
Yep. Guys,
Well,
if you
one, you're paying more in fees, so you actually will be making less. Two, it's okay to just buy one contract on a swing. If it's a little bit more expensive, it's the 50% you make on that, whether it was 10 contracts or one contract, and it equals the same, $250, it's going to be the same profits, right? It's going to be the same thing. Does that make sense? So when you're like, well, I can't buy multiple, that's okay. If you just buy one, you buy one, right? And you also save money on the contract fees because you're buying less contracts. So I understand some of these might be a little bit more expensive, but it's okay to just buy one or two contracts
Yep.
versus like, well, I can't buy like 10, so I'm not going to swing it. You
Yep.
know what I mean?
Guys, and I think too with the small account, you need to be greedy about taking profits. You get C20, take 20, move on. If all those times that you would have just taken profits and just compounded those gains versus swinging for the fences where you're like, well, Apple could go back to 180. It also could not, but you have 20% today. That's the only thing that's a guarantee is that you had 20% today.
One thing I do want to add on to that though is I would put a trailing stop loss, like still hold it. I think a lot of traders in here also are like, well, I see 20, I take 20 without following the next levels or putting on a stop loss to get a greater
Yeah.
gain. Because I am seeing some like, well, I take 20%, but then my losses are 40%, 60%. So it eats away at all my gains. Um, C20 take 20, right, is a good idea, but I also think you guys also need to try to obviously hold it for the trend. If it's still on a trend, hold it for longer, right?
Mm-hmm.
Move your trailing stop up and keep going up and up as it keeps, running on that trend. So I know it's C20, take 20, but I also want to add to, don't just get into the mode of like, oh, it's at 20%, I'm just out. No, it's
Yeah.
still follow the price action, right? Because I totally
Yeah.
understand where it's, especially in the beginning, you have more losses than wins. And so now your losses are like 40%, you're holding longer, and
Yeah.
now it wipes out all of those 20% gains. Absolutely.
Yep.
So
As
still
a
follow the price action.
always follow price, guys. As a 20% or as a small account trader, not every trade is for you. Matter of fact, with a small account, you should be trading the least amount. If you even take one trade a day, you have to be so specific about the trade that you take with a small account to actually build it. You don't just take every single call out. You don't just scalp all day long. You don't have the capital for that. You don't have the drawdown for that. And you probably don't have the skill for that if your account is that small. So you need to stay super patient. And when those trades do come around or come across your desk, like F, right? Not every trade is a small account friendly trade, guys. That's what a lot of you guys don't understand. A lot of you guys have $1,000 position and you're buying two contracts at 250 and you're risking 50% of your size. So if you're doing that, you're either have 50% risk tolerance, right? Like because you're willing for that whole trade to go to zero is what you're saying. So you're willing to lose at least 50% of your account. And if you're not willing to lose 50% of your account, then you're lying to yourself and you don't know your risk tolerance yet. You need to define your risk tolerance. If this quarter position I had on Apple went to zero, it I'd be fine. It would be no problem at all. Okay. But some of you guys, if the position that you have on Apple right now, just ask yourself, if the position went to zero, am I okay? If the answer is no, you probably need to redefine. Okay, you probably need to redefine your risk tolerance.
And the thing I want to add too, especially as a newer trader, you're building you're trying to, build that foundation is, I think you get so sucked into like, I want to make money, right? I want to make money. That's going to happen after a couple years. The
Yeah.
reality of it, it happens after a couple years of trading.
Mm-hmm.
But beyond that, during those couple years is you're going through your trades, you're looking through them, you're journaling, you're putting in your charting time, you're putting in your screen time. So, right, it's going to take time. And in the beginning, you are going to lose money. You're not going to be profitable. And that's the reality of things. And so I think some of you like just want to make all this money, you want to do this now, and you're like, I'm not getting it. It's going to take a couple years. Like, and that's just the reality of things. So if you do accept that, the reward is there for you. If
Mm-hmm.
you don't want to accept that, trading's not for you.
Yep.
And that's just the reality.
Oh, would you say risk is higher on swings and day trades? Um, yes, there can. I believe there can't be more risk involved because while you're in a day trade, you're only susceptible to risk while the market is open because you're likely going to be in and out of the position in the day. Why we talk about swinging a little bit lighter, or Justin suggests swinging a little bit lighter. Some people swing heavier because that's all they do. They don't day trade and they buy so much time that they're usually going to be okay. But you're susceptible to everything that happens when the market closes and you're not able to react, right? So let's say during the day you're in a day trade and there's bad news that just pops out of the sky, right? And that's something you can't control, but you can control getting out of your position when the market's open. Now, let's say after hours or right now, let's say, God forbid, somebody, you know, drops a bomb somewhere. Okay. And I'm making shit up. Okay. But, and the market like is limit down tomorrow. Well, we can't sell until the open. But if that news hit during the market was open, you could probably sell that day and lessen your risk, right? And then take off and then like make your loss not as great for the most part. I'm assuming that it would be a loss, right? So you expose yourself to overnight risk and you expose yourself to weekend risk because a lot of things happen over the weekend, right? So when you're swinging, if you swing a little lighter but you buy enough time, you can swing lighter and capture a little bit of a bigger move versus in day trades, you're just really looking to get those points and get out. Right? You're just looking to see what the market gives you that day. So I would say, yeah, you hold more, you have exposure to bad news and risk more often because the market is closed more often than it's open, right? It's open 6.5 hours a day. Does that make sense? And especially options. The options doesn't trade after hour. Yeah. Guys, there are some people that are really good at day trade scalping all day long. I mean, we can look at Paul, give a huge shout out to Paul. Paul is incredible. I mean, he's fun. He's entertaining to watch as well. He does a great job. But guys, Paul's been doing this for a long time, and Paul doesn't have a $500 account. Okay. So a lot of you guys, instead of actually tailing him and not knowing what you're doing, is do exactly what X just said. Like if Justin and I aren't sitting there scalping all day long and we said we don't like the action, we don't trade. If we don't like the action, what makes you think that you're gonna like the action? Unless, like I said, you're somebody like Paul that has experience doing this, that has this strategy, right? You could paper trade, guys, and like I still do it. I have a notebook right here. I still buy and sell levels intraday that I don't actually take, but it's that because it's a perishable skill. You just got to keep doing it. You got to keep doing it. I would long here. I would, I write it down. Okay.
Yeah, I
So,
think doing less, I know a lot of people, yeah, I think some of you get so I need to take more trades. I need to take more trades like all day long. You're like, I can't miss this move. Oh, I missed this move. I'm gonna catch the next move. And you're just like frantic, like you're a fiend.
yeah. You
Do
guys think because the market's open, you need to
less.
be in something.
And just because this one ticker runs, guess what? Tomorrow there's gonna be another one that runs.
Mm-hmm.
And the day after, another one that runs. And the day after that, and the day after that. There's always going to be another opportunity. Always. But yeah, I do see some of you just sit there all day long, just itching and itching and itching. And you're just do less. One
Just do
trade a day
less,
is all
guys.
I promise. I promise
Do
you,
less.
one trade a day. That's it. That's all you need. Sometimes you don't even need a trade, especially if you're taking some swings. Let the
Yeah.
swings work. You don't need
Guys,
it.
if you miss a trend day and you're sitting in swings, you're still fine. Like you miss SPY trending up, that's fine. Well, we're sitting in other things that are also trending up, right?
And that's the thing about swings is, you take them, you build them up. This swing will finally pop off at some point. This swing will finally pop off at some point. This swing may not work out, but then this swing will pop off and this swing will pop off. You just sit and wait. It's one of the easiest ways to trade, one of the best ways to trade,
Mm-hmm.
especially if you have a job, right? Some of you have jobs and you're trying to day trade all
Yeah.
day. And
Guys, how
you're like, how come it's not working?
yeah, and you're trying to answer phone calls, answer emails, hide your fucking phone, hide your this from your boss, and also give the attention. Like that's disrespectful to the market, to be honest. No wonder it's eating you up, right? I mean, how nice is it this morning if you guys would have just bought MU, it opens up higher, you sell it open, and you close your broker. 2-minute workday. Done. Even one contract yesterday at $4 or four, whatever, 20, 25, 30, whatever, off the top of my head. It actually gets up to 7, but you sell at the open when I sold 6 plus, right? Even just one contract, there's $200 for you. Some of you guys don't even make $200 at your day job for one day. You did that for holding overnight. And it probably took you only a second to get in the day before and a second to sell at the open. That's a good fucking return, guys. Does everybody see that? Guys, $200. You guys are like, well, that's not 1,000%. That's not what I see on the internet. That's not what I see on Twitter. Guys, fuck everybody else. Fuck everybody else. Okay. Think about it. Just pay attention to yourself. Some of you guys work 8 hours a day and don't make $200. And that's okay. But if you could trade like that overnight and do minimal work as far as sitting there and trying to execute day trades all day, and you get $200 a day, and let's say you do that twice a week, that's an extra $400 a week. That's extra $1,200 a month. That's probably your like a 2-week paycheck for you. Added, you just doubled your 2-week paycheck from doing what? It ultimately all comes down to being patient. Are you patient enough? The market rewards those with patience. That's it. I think Warren Buffett says is they said the stocks or profits just pass. It's a passing of money from those that are impatient to those that are patient. That's all. That's all.
That's all the market is.
That's all the market is. It is passing money from those that are impatient to those that are patient. Now, look, Mark makes a good. He says, I have passed on swings because I'm already holding another position. I wanted to do that. Guys, yes, don't get into a swing if you already have other positions on. Don't over leverage or don't oversize. Basically, don't risk too much of your, don't expose too much of your portfolio.
Yeah,
Okay.
not every trade we give.
And not every swing needs to be taken. Okay. I did a lot of trading SPY, SPX last year, QQQ, right? Futures tradings. How guys, when was the last time I called SPY? Now, a lot of you guys are saying, well, Justin's better. Justin is become better at reading SPY and QQQ on a day-to-day level. I will give him that. Also, I haven't been doing it, so, but I do give him that. But what have I been focusing on? How many days do I not even trade? Or like, do I not get in a trade? I call ES and AQ, but I trade futures. Futures trading is significantly different than trading options. Significantly. Yeah, there's no extrinsic value at all. But for the most part, guys, all my options trading is buying a month out, 2 months out. Okay. Letting the chart tell me what I'm going to do. That's it. Can we do a futures masterclass one day? I mean, guys, it's pretty much you're just buying the actual you're buying the underlying. You're not buying a contract, which is a derivative of the underlying. I can do something, but it's like you're just buying levels that you chart, like the 505 level from like yesterday or from 2 days ago on like SPY or whatever, like that 505, which was like 50-60 or something like that. Like that was a buy. It's literally in the, and if you go back to the watch list, be like, I'm long at 50-60, like there it is. So you just buy it. So it's the same thing. But as far as like what futures are, how they work, how much they cost, all that, we could do something like that. Absolutely. Any other questions? I feel like this was a good one today. I feel really good about this.
Great questions from you guys.
And good
As
questions.
always. Great
Good questions.
Appreciate it.
Everybody tonight should have written down, if they wrote down one thing, zoom out, look left. All right. Zoom out, look left. Also, get on a higher time frame. You guys don't have to stay on the 5 minute all fucking day. I promise. All right. Queenie, glad to have you. First virgin. So cherry popped for the masterclass. Hope it was a good one. Hope it was memorable. You tell your kids about it when they grow up. No, I'm just kidding. I hope it was good though. They're all usually like this, I think. Sometimes Justin and I grill you guys a lot, and then other times we're really helpful, but we're always nice ish sometimes.
Yeah, I mean everything we do, we want to see you guys succeed. I mean that I think that's like really the basis for everything that we do.
Yeah.
And sometimes I mean, yeah, we could get frustrated sometimes, but it's just because I think sometimes, especially, maybe from the other places you guys have come from, or I've even seen it on social media where people are just, they're a little bit too sugar coated, just a little bit. I mean, I've obviously backed off a lot from what I used to be, and those have been around for a while, but I mean, because yeah, it's definitely hard. It's a hard thing. So I can't be too hard on people, but there are some times where you get so far away that it's, you're losing real money. And sometimes reality checks just need to happen sometimes.
Yeah.
So whenever you guys feel like, oh, they're being a little bit tough,
Like, damn, they're being mean.
we
It's like
just sometimes we see it and it's kind of like one of those of like just like kind of slap you out of this like
little
little
funk.
yeah,
Yeah.
this funk that you guys are in, and it's like, okay, and then bring you guys back to square one, and then start from there again.
Yeah.
So just because it's it is real money that you guys are losing, like that's something that's on, I know, Norris's mind every day,
Oh yeah.
that's something on mine every day. I know that I have a responsibility. If I make a call and it's a bad call, people will lose money, and
Yep.
that's I mean, it's on me. At the end of the day, it is on me. Obviously, it's on you for taking a trade. It's your responsibility
Yeah.
to take trades, sell trades, but also it's on me, right?
It's
It
on
then so
us to guide you guys through
yeah,
the
in
market
the right way.
in the
So
right way. Yeah.
that's it's always on my mind. I
Hmm.
know it's real money that you guys are using. So at certain times,
Yeah.
if we ever do, you feel like, oh man, they're kind of hard on us, it's because you know there is some times where you can't sugarcoat it, because if you
No.
keep sugarcoating it for yourself and you're just like,
You're gonna
oh,
end up
it'll be
broke.
okay, and you're just like
Yeah.
or you're not like taking lessons from your losses and you keep doing the same thing over and over and over again,
Oh God.
you do need a wake up call at some point to say, all right, yeah, no, I do need to take a step back. I am
Hmm.
doing the same thing over and over
Let
again.
me give
So
a perfect example of that really quickly. Everybody in here, and this will only the only thing that's gonna be said about this is just everybody knows Jenny. I don't even know if she's in here. I don't know if she's in the Discord anymore.
nice.
But everybody watched Jenny straight up unravel in front of everybody, and it was hard to watch. But it happened. We don't want that to happen to you guys.
Yeah.
Okay. So you know what I mean? If we're not being hard on you guys, or we're not saying something like, the coach that like doesn't discipline like he's given up on you. He doesn't care. But when he's always hard on you, like that's because he knows you could do better. Or she, or whoever. They know you could do better. Right. So always remember this, guys. If Justin and I, if you think we're yelling, we're just emphatically saying something we really want you to understand. But like I can't speak for Justin directly, but a lot of like what I do and how I teach and what I say and the sayings I have is because I fucking wish I had somebody do that to me from when I started trading. Like discords and all that wasn't like big at all, you know? So like I wish I had somebody be able to metaphorically, punch me in the mouth. Okay. Um so
Yeah, we don't want to see anybody implode like that. That's
yeah, no, that
it's
was
very
hard to
sad to
watch. It was
see.
sad. And I know it was hard, and there's nothing that we could really do because she wasn't listening, and look, obviously wish her the best. I hope she succeeds. I hope she gets, you know, you're not going to turn it around until you've hit rock bottom. And trading rock bottom is having $0 to trade, unfortunately, just blowing up. And I do wish her the best, but like if you don't correct your mistakes, um like you're gonna keep doing the same thing. And then what's the definition of insanity, Justin? You do the same thing over and over and expect different results. Oh, I keep on shorting at fucking support and I keep on losing. I'm like, well, fuck. I'm like, what do you want me to do here?
Yeah.
So
So yeah,
yep.
I think
But
this was a good one.
this was a good one though, guys. I think hopefully you guys all got you can guys go in the stocks channel after this and tell everybody that they fucking missed a good one though, and make them have some FOMO to go watch it. Because everybody needs to hear this one for sure.
Yeah. Friday. Remember, guys,
Oh,
if you're
it's
agreeing,
Friday, motherfucker. What does that mean?
uh,
You guys thought we forgot.
if you're agreeing on the week, use a portion of your profits, like we always say. Say you're up $1,000, use 200 to $300, and say you let that position go to zero for whatever reason. You're still up $700, $800 on the week. If you're red on the week, sorry to say, in my personal opinion, in our personal opinion, just don't trade on Friday.
Yeah.
Why? Because you already had 4 days. And if you're red after those 4 days, probably by the fifth day, and especially after trading all week, you only have so much mental capacity, right? Only
Yeah.
so much mental capital. We're computers, right? We've already used so much energy trading all week. And if you're red by Friday, the odds of you getting green on Friday is very slim to none. So
Mhm.
just take it off, right? Try to figure out what you did
Reset.
wrong and maybe
Yeah.
paper trade, correct
Mhm.
those wrongs and see if you do it right. And if it goes well, guess what? You have the weekend off, review yourself, come back on Monday strong. We have another 5 days to, kill it. So
Absolutely. Guys, we will
yeah, we will put this will be in the master class. Anybody from Twitter, I'll
section
post it
whenever it's done record or
for you.
processing on um, to YouTube. We'll have it out to you guys. So, yep. Other than
Cool.
that, guys, that's all we got. We will see you guys bright and early on the pre-market huddle. Thanks, guys.
Yes.